Welcome to this week's video, where I would like to talk about what I think is going to be important for individual investors over the next 5 to 10 business days. This week, a little different. We're going to talk about interest rates, something we haven't spoken about in quite some time, but that is really affecting the stock market or as of the last, call it week or so. We're going to talk a specific sector, tech stocks. Tech stocks have been taking it on the chin lately as interest rates have moved higher. And last but not least, our favorite topic, vaccine. A lot of new vaccines coming online, which will definitely help the stock market and individual investors. Well, recently we saw the 10-year government bond rate in the United States and in Canada surge significantly higher. Now, one's going to ask, well, how does this affect me? My mortgage rates are still the same. The rate on my line of credit is still the same. However, individual investors continuously look at the 10-year government bond rate to see what is happening. A lot of those things like mortgage rates and lines of credit feed off of the 10-year bond rate. And as we see the rate on the 10-year bond move higher, which we have all the way up as high as 1.5%, this starts to spook investors a little bit. A lot of individual investors are thinking, well, perhaps maybe some of these stocks that were really good value based on lower rates, all of a sudden, they may not be as good a value with higher rates. And I think, to be honest, it's not so much the 1.5% that we're seeing in the US and the well over 1% in Canada. It's the how fast these rates have gone up. I think that has definitely played a factor. I would look to see, are these rates going to continuously move higher? Will they get closer and creep up closer to 2%? If they do, I think you could see that the stock market overall struggle here. But I think we're going to start to see a slowdown of the rise, and we will continuously see rising rates, but not as quick. And I think that with that in mind, I think individual investors will be able to accept higher rates, keeping in mind that 1.5% used to be the all-time lows at one point before we saw COVID. So overall, I think interest rates will continuously move higher, but at a slower pace, giving individual investors the opportunity to feel more comfortable and move back into the stock market once again. The tech sector and technology stocks. This is a sector we haven't really spoken about much over the past few videos, but the tech sector in particular has been a sector that has been hit quite hard as interest rates have moved higher. Keeping in mind, a lot of people have been nervous that a lot of these big tech names like the Microsofts and the Apples and the Facebooks, etc., have been overvalued. But then again, while interest rates are extremely low, that gives a little bit of cover for these stocks to continue to move higher under the current environment. So once again, when you couple higher rates today than they were just maybe a couple of weeks ago, with the perception that maybe some of these tech stocks are overvalued, what do you get? Well, you get a sell-off in the tech space. Going forward, I would say look to get into some of these names on the pullback. I don't believe that this tech sector will continue to pull back going forward. I actually believe that at some point, individual investors will start to pick away at some of these names that may have sold off 5, 10, 15% perhaps over the past few weeks. So I'm actually looking at moving into some good quality tech names on the cheap, on the pullback. Vaccines, our favorite topic, something we talk about, I think, almost every video. But how can we not? Over the weekend, we saw Johnson & Johnson approved in the United States, which is a single dose. We are hearing that there could be as many as 20 million doses given from Johnson & Johnson to the United States government to deploy right away. And this is so powerful. That would mean 20 million people will be fully vaccinated. We're also hearing that most recently here in our country, in Canada, AstraZeneca has been approved. And we could see as many as 500,000 doses given to our government in a very short period of time. So going forward now, I believe individual investors are feeling even better about what's going on. I know there's been a lot of hesitation, a lot of disappointment with the vaccine rollout, both here in our country and even in the United States. But I think things are really ramping up. And I can't help but to believe that individual investors' moods will be a lot better in the coming weeks and months. And perhaps by the spring, by the end of April, beginning of May, we're going to be in a much more positive situation. And when we see this, this can only help the economy, the stock market further, and the mood of all of us individual investors.